Good day traders, Adrian here from Tradeology, and today we're going to continue with our lessons. Today's lesson is Fibonacci, and we're going to discuss the Fibonacci tool in detail. Fibonacci was conceived by a guy called Leonardo Fibonacci, an Italian mathematician who was born in the 12th century. His sequence of numbers is one of the most important contributions, not just to mathematics, but to art as well, because they are intimately connected with the golden ratio. Its importance lies in the fact that this ratio can be seen everywhere around us in nature and life. The definition of the Fibonacci sequence is that the first two numbers are 1 and 1 or 0 and 1, depending on the chosen starting point of the sequence, and each subsequent number is the sum of the previous two. So for example, we've got 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, etc. to perpetuity. The golden mean is the number you get as a result of a division of the two subsequent numbers in the sequence. So for example, if we divide 144 by 89, we get a ratio of 1.618, or if we divide 89 by 144, we get 0.618. Other primary derived ratios are the square root of 0.618, 0.786, the fourth root of 0.618, 0.886, and the inverse of 0.886, or 1 over 0.886, 1.13, and the inverse of 0.786, or 1 over 0.786, which is 1.27. You don't need to know the actual derivatives here, but the final results we'll get to shortly. The key Fibonacci ratios are 23.6%, 38.2%, 50%, 61.8%, and 100%. These lines are ratios between two highs and lows of a trend. The 50% level actually does not exist in the Fibonacci sequence of ratios, but traders use this level because of the tendency of reversals after retracing half of the previous move. Now, its general usage for trading, there are two primary ways that traders use Fibonacci sequence in trading. One is to identify or confirm support or resistance levels, and the other is to help identify price targets. Very often, traders will find themselves in situations where they'll realize that a significant level of support or resistance has been broken while they weren't paying attention and that the market has already moved significantly. That's where Fibonacci sequence can help, to identify possible levels of support and resistance as well as target levels. For Fibonacci retracement, when the market is in an uptrend, at a certain stage the price will fall back down where it will find support and then bounce back. On the other hand, when the market is in a downtrend, at some stage its downward movement will stop and price will rise up where it will find resistance and then fall back down. When trading using Fibonacci, we are looking for the opportunity to get into trades on those Fibonacci retracement levels where price bounces back up in an uptrend situation when it hits a support level, which may correspond to a Fibonacci support level. So on this image here, we can see when trading Fibonacci, we're looking for the opportunity to get into trades on those Fibonacci retracement levels where price bounces back up in an uptrend and when it hits support, which may correspond to the Fibonacci support level. In a downtrend market, we are using Fibonacci Retracement tool to get into trades at Fibonacci retracement levels where it hits resistance levels, and these resistance levels correspond to the Fibonacci level. Now, the Fibonacci Expansion tool is another tool we can use, and it's applied to one wave of a price move, which in turn helps to predict where future waves in that trend will go to and possibly reverse. So let's have a look at this image. In this example, you can see how future support and resistance levels correspond with the Fibonacci expansion levels. How to apply Fibonacci retracements to your charts. Or MetaTrader 4 platform, we first go to Insert Fibonacci Retracement, or you can select the tool directly from the toolbar. After selecting the tool, identify the start, point 1, and the end, point 2 of the trend, and draw from one point to the other, from left to right. Same goes for a downtrend. Identify the start, number 1, and the end, number 2 of the trend, and draw from one point to the other, from left to right. Now, let's have a look at how to apply Fibonacci expansion to your charts. On the MT4 platform, go to Insert, Fibonacci Expansion. Once the tool is selected, draw from the start, number 1 of the trend, to the end, 2 of the trend, just like with Fibonacci retracements. After that, click on the second line that will automatically be drawn and adjust its end to the next swing low or high, 0.3. Now, how do we delete Fibonacci from the charts? There are 2 ways of deleting Fibonacci from your charts. Number 1, double-click on the red line that connects the low and the high and press Delete key on the keyboard. Or go to Charts, Objects, Object List, or press Ctrl and B, find Fibonacci in the list, select it, and click Delete. Let's have a look at some applications or examples. Fibonacci Retracement. We'll use an example of uptrend reversal, where we'll add Fibonacci tool to detect our possible targets for a sell trade. First, we have to detect the uptrend and its reversal. Then we'll draw the Fibonacci retracement levels from the swing low to the swing high of the trend. The first Fibonacci level will be our confirmation and entry point, where the candle closes below it. The next 2 levels will be our targets. Now, for Fibonacci expansion, in this example, we'll use Fibonacci expansion to detect entry points and targets of an ongoing uptrend. As in the image, the first point will be the swing low of the uptrend. The second point will be the swing high of the uptrend, and the third point will be the swing low of the pullback or reversal. The first Fibonacci level will serve us as the entry point for a long trade. After the candle closes above it, we are ready to place the trade. Second Fibonacci level will be our first target, and third Fibonacci level will be our second target. So Fibonacci is a great and very useful tool in trading. It's utilized by many traders. It helps us find and determine levels of support and resistance, as well as future targets. It produces even greater results when paired with other indicators, like MACD, for example. I hope the short summary of the Fibonacci tool can be of use to you. It's a useful tool and well worth investigating. Thank you for listening. Thanks again for watching, and please remember to subscribe to our channel below to receive notifications, so whenever a new video is released you don't miss any. And again, for a free system, also check out our link in that description below.